Howdy folks, super quick update on natural gas. I wasn't planning to do a video, but I'm going to cover natural gas and oil very quickly because these have moved a little bit and I've changed my position on oil. But let's start with natural gas and let's go to the day chart on the Henry Hub, chart that we always look at. Bouncing off that support line, you can see this Fibonacci level below us. Let's zoom in. This 38.2% fib has acted as a support level on numerous occasions and resistance actually. And we've just dropped down there back to that 20 period moving average on the day chart, bounced off there. We're trying to hold above there and the 50, the red line is the 50. There's the order block that we broke through and closed above. Now, a lot of you will be saying, well, James said we closed above the OB/MSB and we should be going up. But if you watch my last video, you'll recall that I did say that we may have to faff around just underneath that level for a while. The fact that we broke and closed above that order block means that it's been overcome, it's been defeated. And ostensibly, we've created an environment for this price to move up. And despite the fact that we've pulled back a little bit down to this 38% fib, isn't really as important as the fact that we broke above. It doesn't mean this might not be a false break, but we haven't made a new high, but we did close above the order block. So it's very different to a false break above a resistance line or a trend line or something like that. This is actually a positional close above that level. So it means that that order block is no longer valid and we can actually remove it. I've left it in there so we can see where it is. We've fallen back down to that 38 and bounced off there. This is the day chart on the Henry Hub. Let's have a look at the 4 hour. I'm sorry, I got interrupted by a phone call, so I've just had to pause and resume. So this is the 4 hour chart. Notice how we bounced off the 200 period moving average and the 100. These moving averages are literally moving sideways across the page, which means we're going nowhere. The price is going sideways. So until we get above there again, we're still stuck in this range. But as I said earlier, the fact that we've had a close above there on a 4 hour, a daily and a weekly chart means that that level, in my opinion, is now being defeated. Yes, we didn't manage to close above the high over here. That's slightly concerning. And then we gapped down over the weekend. Just a little gap, but enough to just sort of push this momentum back down a bit. But I do like the way this is reversing again on the 4 hour chart, and I think we're starting to move up. Let's go across to the spot price, which looks even more encouraging. Remember that 15-minute on the Henry Hub's delayed by 15 minutes, so we might be a little bit behind there. I showed you this chart yesterday. This is over at Pepperstone. This is the tiny little demo account that I've got. And you can see we're right in the middle of our positions. Those of you who've been following me in the live trading will know that we're kind of at break even right now. You'll see the trade positions below us, these ones here, which are slightly negative. They're actually in profit in terms of price, but negative because of the negative carries overnight, day to day, week to week, month to month. And that affects all of these positions, of course. So these carries, what's nice about Pepperstone is that the carries are built in. So when you close your position, the rollover costs are already built into the price that you see on your charts. Whereas with futures and different brokers, you may not see that. And sometimes the carry cost is covered elsewhere or hidden, or it's difficult to find. Anyway, that's where it is. We're kind of at break even. This is a very small account, under $1,000. And this is just to illustrate my positions. We need to close above 2.25 on the futures again, which I think we will do. Remember, this is lagging. This is the spot price or cash price, whatever they call it, over at Pepperstone. This is trading at 2.1. Just to remind you, going back to Henry Hub, this is trading at 2.19. So there's still 9 cents for the spot price to catch up if the futures keep moving upwards, which it looks like they're going to because the forward months are priced higher than the current month. So we should see everything start to move up, actually, as we move towards the end of the year. And in fact, our target on the futures currently is about 3.3 to 3.5. $3.30 to $3.50. That's the way it looks right now. Doesn't mean that those prices won't change in the future. But having said that, the spot price probably will catch up with the futures. We've bounced off that trend line, a little bit of a dip below. Remember I said we should watch this and be careful of the 100 and the 200. And now the 50 underneath as well. Confluencing, if that's a verb, I don't think it is, above the 200 period moving average. And we've traded precisely according to that. So I kind of like it. I don't like rising channels, by the way. If I clone this trend line from the bottom and make it into a parallel channel line, you'll see we've got a rising parallel channel. We've looked at this once or twice before. It's not perfect, but it's there more or less. I don't like rising channels until we break out through the top. They always look a bit weak to me. So I'd like to see a big surge through the top of that channel to defeat it, and that would ease my mind about this rising channel formation. Rising channel always looks like a bear flag, actually. That's the only reason. But it's only a bear flag once we break out through the bottom. We did try, probably scared out a few people there. Little dip below that trend line. We now have to redraw this trend line because it's gone a little bit skew, and that trend line at the top, this parallel channel line, won't be valid any longer. So let's get rid of that. It may be valid, but it won't be that shape, of course, because we've now moved and created a new low, which I've just drawn in there. So the previous trend line looked like that, and that would have scared a few people out, that dip below the trend line. Now we've got a new low over there. We've got to redraw the trend line. Now it's not such a neat trend line because we're missing the two parts, the two touches in the middle, which is annoying, but there you go. It's a trend line nevertheless, and I want to break out through the top of that trend line, which would be the channel top. So we'll clone it again now that we've got the new shape and draw this up here, and you can see that actually looks a bit better. Although we've got these two spiky candles, I'm tempted to draw this a little bit lower down, but the price actually did visit there, so let's leave it there to be purists. You get purists and estimators in trading. I sort of swing between them. I tend to be a purist in most things, but sometimes in trading it's a bit messy, and you know that the trading charts aren't always going to be purely perfect technically. So that's what that little breakout below the trend line, forcing me to redraw the trend line, and that probably would have created a bit of panic and stopped a couple of traders out. Designed exactly for that. Notice we also closed beneath all of those moving averages on that little dip down last night or early this morning, and that's what creates the panic and the false breakout and the reason that we've had to redraw this trend line. Having said all that, all looks good. Watch the top of this channel. I want to break through there, get up towards 2.25 on the spot. That would see the natural gas over at NYMEX rise even higher, and we want to see this moving up towards the $3 level. Post haste. Let's go back to the NYMEX. This is caught up now because of the 15-minute delay. Not nearly as clean as the spot price over at Pepperstone, and that's why it's always good to look at the spot price, but sometimes it gives you a better technical chart. But nevertheless, maybe a little bit better. Let's get rid of this green blob, which was there for a reason earlier. Still a very messy contract that we're trading in, sort of spreading out as that blob moves along. There's that close above the order block. Also on the NYMEX, we got up as high as 2.3. So we just want to get back up over there, close above there. I think that will happen, and then start moving higher above 2.25, 2.3. And the overall target eventually will take us much higher, I think, up into some of these levels here, 2.5, 2.7, just looking at the Fibonacci's, then 2.9, eventually $3, and my overall target eventually at some point is somewhere around 4.4. Whether we'll get there this year or early next year, I think the forces are aligning for a much higher natural gas price. If you look at all the data coming out of production, supply, weather, economy, LNG exports, and so on, and just the whole balance of supply and demand, as the dogs are barking in the background, has changed and is shifting more towards not enough supply and more demand for natural gas. And that just means that the price will probably go higher. Thanks, Brian and Bill over at Energy Rogue, for your constant insights on that. And if you're not a member at Energy Rogue, you can either go and join them now, or you can wait a few days to join the Swing Trading Blueprint course, link below, and you'll get free access to Energy Rogue too. So I think that's a fantastic bonus. I'll see you around. Take care.
Natural gas flowing lightning.